And another beautiful day as we head into Friday in the cryptocurrency lands. Traditional markets closed and the cryptocurrency markets moving into what might be an uneventful weekend. But hey, don't hold me to that because we've seen crazy things over the weekend before. We've got a fantastic show. We're going to break everything down in today's Breaking Bitcoin Market Update. Well, apparently the hotkeys aren't working, so I got to do this. Welcome back to the show, everybody. This is Breaking Bitcoin, your daily source for everything cryptocurrency markets and systems trading. I'm your host, Justin Wise, lead analyst at KrakenCryptocurrency.com. Hopefully everybody is having a beautiful end to their weekend, TGIF, as they say in the corporate world. Time to kick on the sandals, hit up the sandy beaches, unless you're living in, anywhere in the Nordic, in the northern seaboard where everything is cold as heck, and enjoy your life and stare at the cryptocurrency charts for 8 hours over your weekend, because that's what relaxing is. Yes, stressing over highly volatile financial markets, looking at the price charts. That is the relaxing weekend to me. Yes, it is. Anyways, we're going to give you guys everything you need to know to go into the weekend with a good mindset, with a good trading plan. I'm going to give you guys that I took today, how I secured $238 in profit today off my BTC position. And we're going to go and just touch on, as it is the close of the regular work week, we're going to touch on where the weekly charts look, where everything looks in the bigger picture of Bitcoin and everything else. Obviously, before we begin, if you guys would like to support the stream, if you look right down there here on YouTube, you will see the like button. It's right next to the subscribe button. You guys are the ones who keep this channel going and incentivize me to come back every day and deliver great content, as I hope I do. If you have any questions, feel free to drop them in the live chat. And if you'd like to work personally with me or my team throughout 2023 to build your strategy, grow wealth, or learn the cryptocurrency markets, lots of links down in the description, lots of ways to get involved with our community. With that out of the way, let's get going with today's market analysis. Okay. So, relatively interesting or kind of uneventful day. Basically one decent move today, and that was the long trade. And potentially positioning for a short. We'll definitely see how this range resolves itself if we do push up for another test of the highs, or what the weekend brings us. Remember, usually we've gotten very spoiled by having uneventful, low momentum, high volatility weekends, which means price just chops around and then goes back to whatever it was doing on Friday, because there wasn't really a lot of retail interest in trading on the weekends. That's when the hobbyists would come in. That's when the kind of cryptocurrency enthusiasts would come in and do their thing, do their little trading. But there wasn't significant volume or capital. And that's starting to change. And the reason that's starting to change is because of the fact that price has gone up now and everybody's kind of looking at it like, oh man, I better FOMO into that. Multiple reasons. Fresh capital is rotating into the markets. And we've touched on that yesterday. Go back and watch yesterday's stream. I touched on at length exit liquidity, where we're at, looked at on-chain data, all of those things. Okay, so we're looking at the hourly of BTC USDT. Over the last 3 hours, Bitcoin completed its mini trajectory of this run up. This is the movement where I was able to secure my profits for the day. I am now out of my position intraday. I'm flat intraday. As far as the daily time frame goes, I am short. As far as the weekly time frame goes, I am 80% out of my long and I'm 20% into my short. So we're all clear on that. Okay. Now, what's interesting about today, and we'll get into this more when we do kind of the intraday breakdown. But yeah, again, essentially, really, I'll tell you guys what I saw, and I think it'll be easier if instead of starting off, as we've kind of been doing over the last few days, focusing on the day trading opportunities, let's, as it is the weekend, moving into the weekend, let's zoom out, focus on the day, focus on our top-down analysis and work our way down in this direction. So let's start with the weekly time frame, and we'll pull out our trend detection system. Okay. feel like I didn't save this. Yeah, I optimized this, but I didn't overwrite my trend detection system. Any hoosers, doesn't matter. Okay. Key points here. The most important things to notice is that from a market structure perspective, we are not out of a bear market rally. Again, I don't want to be very pedantic here, but I just want to mention that Bitcoin has never V-bottomed out of a bear market in the kind of in the way that we're seeing it right now, in the way that a lot of people are talking about it. And this kind of, psychology comes in a lot whenever we're in these areas of the market. People were saying very similar things kind of over here. People were saying very similar things over here. If you will recall, there was just a lot of euphoria, and it's good. There should be a lot of euphoria. It's good to be excited about something that is fundamentally important, that is fundamentally groundbreaking, that is making the world a better place, and that is Bitcoin. We'll kind of deign to not answer on the rest of the cryptocurrencies, but Bitcoin particularly, yes. And there's a lot of euphoria. People are talking about the beginning of a bull market. And the on-chain data coming in is not necessarily negative. It's positive in the fact that we're not seeing long-term holders take advantage of this for exit liquidity. Now, we are seeing miners, as I said yesterday, begin to dramatically ramp up their distribution as they are taking advantage of this price increase to shore up their coffers, because miners, as all individuals are and all companies are, layoffs everywhere, are being hit hard with this economic downturn. And miners in particular are very hit hard in the economic sense when the price of Bitcoin goes down, because that's reducing what they can make. That is the number one, or one of the number one inputs in their profit model, is what is the price of Bitcoin. And then other significant inputs would be how efficiently can I mine, how many Bitcoin can I, blah, 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 all the mining stats. So now that price has recovered above the average cost to mine Bitcoin right now, which is about $17,000, they are moving from net stacking to net distributing. And again, the metric that I had from Glassnode was 1,600 BTC per day. Mr. Ether pointed out something about like 600 to 900 yesterday, I do believe. Get the tunes on, sorry about that. And so we find ourselves here, right? We find ourselves here. So again, key points, key things to point out, the things that I'm watching here on the weekly time frame are twofold. One, as far as a trend status goes, we are trading above the 21 weekly exponential moving average, the Tenkan-san leading line. Those have been the two definitive lines to watch for. So what I'm very interested in is when we do get a market pullback here, do we stay above those levels? We'll look at our critical levels of support and resistance here in a little bit, but if we're able to pull back and maintain above the 21 weekly exponential moving average, maintain above the Tenkan-san leading line, then those two lines can act as a nice form of dynamic support. And then we can be having a very different conversation, because two things will happen then that will be very different that we don't see right now. One, we have established a higher high, or excuse me, we've taken out a previously lower high. So previously, our market structure was that of making lower lows, lower highs, lower lows, lower lows, lower highs, lower lows. And a bull market is characterized by making higher highs, lower highs, higher highs, higher lows, higher highs, higher lows. So if we pull back and see a higher low with convincing volume and buyback, and then we start trending back up, well, then the conversation does become different and we might be looking at something unique. But until then, we want to be cautious of being overly enthusiastic on the initial push up. The reason why we want to be especially cautious now is that over 97.5% of short-term holders, these are individuals who have held their coins for less than 6 months, are in profit. And when that happens, historically, we've always had a sell-off event. Again, not with the exception of late-stage bull markets, right? With the exception of late-stage bull markets where we did experience sell-offs. For example, this is a situation right here. However, we did continue to climb up after that. And for the bulls, that would be the ideal scenario, to see that pullback here, for us to stay above these major moving averages and for us to be able to continue forming a nice progressive movement upwards. So trend detection system, the other key points to point out here with regards to the trend detection system we will see on the Binance chart so we can have a little bit more historical data is going to be that 200 period simple moving average. Excuse me, not this chart, this chart. Simple moving average coming in around 24,500. So very meme area to look at, the area I'm personally targeting in the event that price does go ahead and drift right on up there for my third or the last 20% of my weekly long position that we scooped up down here in the consolidation range. And then seeing something like that. So you kind of have to measure the risk to reward ratio of where your opportunities are. I would continue to look for daily or short-term opportunities to trade to the long side on things like pullbacks or breakouts. However, I would also be viewing this area as a value area to be shorting, which is exactly what I'm doing. I'm simply giving you guys the rationale for why I do the things that I do. Shout outs to Alex81SG and Yes to Crypto in the chat. Alex saying that Bitcoin was trying to break out again, but the S&P closed with a bit of a sell-off. Yeah, profit taking moving into the Friday evenings. So again, it'll be interesting to see. So now, this is why I said earlier that, let me switch to a different scene here. This is why it will be interesting to watch what price does over the weekend, because it'll be interesting to see what price does over the weekend, because now we're in a time period, the next 2 days, where we're not necessarily tethered to the stock market anymore. And Bitcoin has shown historically that it can severely detach, particularly over the weekends, from the regular traditional markets. Now, as I said, if you would have been studying the last year, this pattern wouldn't necessarily be so evident, because as I said, we've gotten very spoiled with having these low momentum but high volatility, i.e. choppy weekend markets, where price just simply, wherever price closes on Friday, whatever price does over Saturday and Sunday, by Monday, that's where we're opening back up. So we might go up, we would come right back down. And I wouldn't be extremely surprised to see that. But if you're going to be trading over the weekend, I would be prepared. I want you guys to be watching for momentum. I want you guys to be watching for breakouts, and I want you guys to not necessarily have the mind to fade those movements. Okay. All right. Looking at our weekly reversal system, which I have, for the benefit and requests of several individuals, made a little bit prettier and easier to see. So we are currently on the weekly daily time frame unable to close above our current level of daily resistance or intraday resistance. Those two levels are 23,180 and 23,371 respectively. Unable to close above those levels. We've been teasing with them, testing them. We just did another run up and tested that level here as well just a few moments ago. We are now trading barely, but we are above the upper envelope of the Bollinger Bands on the weekly time frame. And historically, when this happens, whenever this happens, we get a retreat in the opposite direction, and we come and test the middle line of the Bollinger Band, or the average price. Okay. Yeah, again, here. This is the only situation where it doesn't occur, and this is late stage bear market, massive trend here. Let's see here, and then late stage bull markets, late stage bear markets. So we're not in late stage bull. Well, we're in late stage bear market from a macro perspective, but if we're looking at the trend, that's what I want you guys to focus on. On the weekly time frame, our momentum oscillators are not overbought. Of course, how could they be overbought on the weekly time frame? Minx is looking to actually potentially shift into a bullish trend if we are able to get a close above the zero line here. So I would reckon if we're able to get a weekly close above the 200 weekly simple moving average, somewhere around 24,500, we will be getting that signal. We are now coming out of our regular bullish divergence here. And this was exactly the type of signal that we took for the things we were looking at when we went for that long trade. And we also kind of got lucky. I'm not going to lie. So we've got Valk Mike. Good to see you, my friend. Jean Remy in the live chat. is holding, but he understands me. I'm glad somebody does. He says 23,000 is just the starting block. I hope so, man. Listen, you know, I am able to successfully take off my trader's hat and my investor's hat, and I have far more money. I have much more money in my investment portfolio than I do, or in my, and so when I say investment portfolio, I kind of feel like that's a misnomer for cryptocurrency, because I don't really view my, I mean, it's easy term to use, right? But my cold storage, my long-term storage, my dollar cost averaging storage that I add to every single month, yeah, there's more in there than in my trading account. So I would be pleased as punch if Bitcoin just kept pumping. I'm not going to lie. Even though I would probably look like a fool on stream and lose money. Valk Mike says, do I trade spot and leverage? How much leverage do I use? So for the most of my trading right now, actually all the trading that I've done, particularly since all the trading I've done in 2023 and almost all the trading I did in 2022 was leveraged on Bybit. So Bybit USDT derivatives, BTC USDT and ETH primarily. Depends. So I've learned over the years to structure my accounts a little differently. To answer your question of how much leverage I use, it just depends. So I use cross margin, so I don't have to worry about isolated margin and liquidation price points. I use stop losses to manage my liquidation prices, or to manage getting into and out of trades, rather than worrying about getting liquidated or anything like this. When I'm day trading, depending on the size of the range, I'll use anywhere from 10 to 25x leverage. Because that's just more convenient for me. It allows me to free up less capital, and I just use the stop loss where appropriate. I position size all my trades. When I'm taking bigger picture trades, when I like daily time frame where I have a wider stop, I'll typically be using 3 to 5x leverage. And the way I accomplish this is I use sub accounts on Bybit. I've got a short on YouTube if you guys would like to know how to set up a Bybit sub account. It's very simple. You can do it with a few button clicks, and it is your own segregated account. You can kind of think of it like a limited user on your computer. You have your admin account, and then you have your user account. So you have your admin account, which is your main Bybit account. You just spin up a sub account, and you can throw money into there. And then whatever happens in that sub account can't reach out into your wider one. So this is how a lot of people will do it, and actually how I recommend doing it. I do it backwards, but if I were teaching somebody to do it, I would tell them to, in their primary main account, to take their daily time frame trades, 3 to 5x leverage, and then I would create a sub account, put, you know, $100 in there, $1,000, whatever. It all depends on your capital, and use that for your high leverage intraday scalping or trading. Crypto Rick, good to see you, my friend. All right, so if we see failure here, pullback zones, where is our intraday level of support? Intraday level of support is, I want to make sure I get this right, 22,893. It's going to be our current level of intraday support. And our daily support is all the way down at about 19,257. So that has nice confluence here with the median price, with our average price here, our middle Bollinger Band line. So a rejection here and a retreat, we are looking at, if we get rejection here, back down to support is about a 17 to 18% pullback. That would be pretty bad to see, but we can still absolutely pull back, reset, and continue moving up. It's happened many times. In fact, if we go back and look at how, let's go back to 2018, shall we? And this, obviously you guys remember this, but let's just feast your eyes upon this. We had a very similar situation here to the FTX collapse, but it just happened this year a lot faster, or last year, excuse me now, where we moved down, dropped 50% in about a month and a half. And then we boom up on a 20% weekly candle, go sideways for 2 weeks, and then down 13%. Make a higher low, and then it was off to the races ever since then. And, you know, again, well, not necessarily off to the races. We had a beautiful rally for quite a while. And then price went sideways for the better part of a year, followed by the March meltdown, and then off to the races. So it's easy to, I'm not going to lie, there's a possibility that we are witnessing perhaps something like this. All right. And we'll see as time and charts progress. But even if we are, and let's say worst case scenario, you're stubborn, you're bearish, you just refuse to believe it, you listen to Justin, darn that YouTuber, and then so you kind of missed this run. All right, well, boo-hoo. You know, this range gave you multiple opportunities to identify and enter high value areas. Plus, it also gives you more confidence because you know that you've seen the bottom, price has moved up a significant amount, and you just trade the range. You just buy anything underneath those Bollinger Bands. I mean, lots of different simple strategies that you can implement. Moving down to the daily time frame, and let's switch it up a little bit. I like change. Change is good. Let's take a look at what you're talking about here, Alex. You said if the monthly was to close at these levels, looks eerily similar to October 2015. I see what you're saying. Yep. So, yeah, nice push up, a little bit of consolidation, and then we continue moving up. Yep, I could see that. Not a bad eye. In fact, have we ever seen before? I don't think we have. Yeah, I don't think we've ever seen a V-bottom monthly bullish engulfing candle out of a bear market like this one. Off a low. Yeah, I feel like this is a first. Monthly, not quite oversold, not curling up yet. It'll take a little bit of time. But we were, you can see that on the monthly, our VIX fix indicator here was indicating value area to purchase. So interesting. All right, let's look at our daily trend. And then we'll finally get back down from whence we came. One thing I'm watching very closely is price's interaction here with the 8 daily exponential moving average. You'll notice, and this is true of most trends, this being a particularly powerful one, that we have not, that we've been able to successfully stay above all of our major moving averages. And this is going to be the case for powerful trends. And it's when we close, it's when we pivot. And we're starting to see, you know, here's things that worry me. It's all these wicks, right? Wicks are very indicative of all consolidation areas. But now this consolidation level has lasted longer than the previous weeks, and we haven't been able to make any significant advancement. And furthermore, there's no significant daily pullback here that's been bought up. Here we had a little bit of a daily pullback to the 8 DEMA, and then we pushed off immediately. You'll recall that 2 days ago, we had this fake out to the upside, and price on right before it did that also pushed down to the 8 DEMA and was unsuccessfully, was not able to break out. Crypto Rick asks, do I think the yearly bearish engulfing is much to worry about? So let's take a Gandhi. I mean, there's multiple ways to look at it, right? Here, let's try this, right? So down, up, up, down, up, 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 down, up, 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 down, right? So it's been up, up, down, up, 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 down, up, 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 down. So, you know, basically this is kind of an analysis that I read a while ago where somebody was simply pointing out, they're like, listen, Bitcoin does well for 3 years and then pulls back for a year, and does well for 3 years and then pulls back for a year. And yes, this is likely this is of course the most significant weekly bearish engulfing candle we've seen. So I don't have too many insights with regards to the yearly bearish engulfing candle. Typically, I've always kind of defaulted on this topic to, well, you know, Bitcoin is still so relatively new that it's hard to discern anything, because if you want to get into the realm of statistics, you know, you need like hundreds of thousands of data points to really, or excuse me, not hundreds of thousands necessarily, but you need at least, and this is anyways how I do it with back testing, you want to see at least the results of 100 trades before you want to consider a strategy statistically sound, before you say you can have a somewhat robust data set. You know, 6 trades ain't going to cut it, right? Like, oh, okay, I see that the true strength indicator like won 6 times. Well, it's only fired 7 times the whole time Bitcoin's been alive. So, you know, but of course, other people have different opinions. Some people do view this, again, that what's interesting is that the people who should be viewing this as significant or as extremely bearish, like the end of the party, let's say, I feel should be the same people saying the same thing for opposite reasons about the monthly bullish engulfing candle. You know what I mean? Like, we've never seen a monthly bullish engulfing candle like this one before. Ugh. Good evening to you, Peckham. Cedric Harris asks, am I in any other trades besides Bitcoin right now? Yes, I'm in a few degen positions that I've been holding for a couple of months on Ethereum. Yep, the members of the premium group are aware of that. Other than that, not so much. My goal this year is to really focus on Bitcoin with my trading. And then when I have confirmation, when my analysis and I feel better about the fact that there's more renewed upside, that the woods are behind us, then I'll start averaging into positions in cryptocurrencies. I do not recommend buying altcoins at this point in time. And you're obviously, of course, free to do what you want, and feel free to come back and tell me that I was wrong. But here's my experience. I've been doing this for 5 years in cryptocurrency, and you know, you don't need to buy altcoins at the bottom. Like, altcoins do well regardless. You diversify your portfolio based upon market strength, not based upon speculation. Now, that's my strategy. I've done well with that, where I will wait until it's really obvious that we're in a bull market. Not like, oh, like we've been in a bull market. Like, no, okay, price has been going up for quite a while now. Like, all right, things are looking good. That's when I'll start averaging into my positions. And I dollar cost average on the way up with altcoins. With Bitcoin, because I fundamentally believe in it long term, I'll dollar cost average in on the way down. Okay, but I won't do that with altcoins. I don't see the point of averaging into a losing position if you don't have the guts to hold that position for years until it recovers. I have the guts to do that with Bitcoin. I've done it before. You know, I can sit through another 2 years of hating my life. But with altcoins, I'm not gonna buy Cardano, for example, because it could go up 3,000% when it could go down 90%. I'm not gonna do that until I see that everything broadly has been rising for months and things are good. Beckham says, what if we are not in a bear market? Why? Bear with me. What happened in reality? The price went exploration and found a retest of support, and thus not a bear market. I mean, yeah, like I would, okay, so hold on. I would say that what characterizes a bear market is, and this might sound stupid, but it's not necessarily, and this is what I put out in my newsletter yesterday. What characterizes a bear market is not the price movement of any one individual candle. A bear market or a bull market is just a synonym that we use for a dominant trend, for a clearly established trend. And a trend is the tendency of price to behave or move in a certain direction over time. So when I look at this chart, it is beyond doubt that we are still in a bear market. And what I mean by that is not that necessarily price will go down again, even though I do think that. What I mean by that is that if you look at this chart, the tendency has been for price to, on average, move down. Meaning the safest position at any point in time over the last year has not to press the green button. It's been to press the red button. If you press the red button at any point throughout the last year, with the exception of the last 2 weeks, and you just waited, you would have made money. That is a trend. That is the power of trading in the direction of the trend. That is the power of picking a position, not having to nickel pickle your entry price, because you know that the trend is on your side. And if you're wrong, you have a losing trade and you take your loss. It is what it is. Use risk management. So because the perceived trend of the market right now is only in the short term to the upside, when I'm talking about the macro here, what is the overall perceived trend of the market? It is to the downside. We are still in a bear market. But I agree with what you're saying. Ryan Goulding, good to see you as well, my friend. Good to see you as well. I took a sabbatical. I had a daughter. Life caught up with me. Back doing it. Nestor27 says, we will keep going up. I love it, man. We need more crypto bulls like you in here. And like, don't get me wrong, like I'm a crypto bull too. Oh, my dog's going crazy. What's up? Say hi to the camera. Come, get your fat ass up here. Buy a husky, they said. Be a great companion, they said. Okay. Now, the moment you've all been waiting for. No, let's take a quick break. Thank you guys so much for watching the stream. I really appreciate it. If you guys want to support what we're doing here, just click the like button down below, hit the subscribe button. There's a share button there. Tell your friends, your family, tell people you don't even like. Tell everybody that made fun of you in high school. They're the ones who need to see this content more than anybody, and you know what I'm talking about. Also, if you guys find this content helpful, you will also really find my free guide very helpful. 5 mistakes holding you back from profitable trading. I've been teaching students, thousands of them across the world for the last 5 years, how to build objective, if this then that, trading strategies to apply to the cryptocurrency markets particularly. If you guys are struggling with your trading, you guys find yourself making mistakes that make you kick yourself and say, oh man, like, I know I shouldn't have done that. Like, I feel stupid for doing that. I saw price going up and I hit the buy button for 2 BTC and I only had $3,000 in my account. Now I'm freaked out and I just took a $50 loss because it was moving around too much and didn't mean. Those are mistakes that you should not be making. Those are very common mistakes. If you're struggling with what to trade, what time frame to trade, all of these things I talk about in the guide. It's completely free. Doesn't cost you $1. Link down in the description, 5mistakes.cracking.cryptocurrency.com to get your free copy delivered right to your inbox. Thank you very much. As always, feedback is appreciated. Back to the show. We'll do split screen charting this time, I do believe. And bring this pupper in. Yes to Crypto is walking his Husky German Shepherd mix. That is the exact dog I have, brother. Yep. A Gerberian Shepsky. Okay, let's get down to the nitty gritty. Starting our top-down analysis on the daily, we've got a lot of ranging behavior, big wicks to the upside, definite big screw you candles. So we had a nice move to the upside, end of the downside today. The play that I made today was the long trade. We're already established in the short position. We'll see how that plays out, obviously. You guys will come back to tell me I was a genius if I make money, and you'll come back to tell me and laugh at me if I'm wrong. And that's how it goes. It's okay. You take losing trades if you take a loss, and you celebrate your wins. And you really do need to celebrate your wins, and I'll tell you why. It's because humans have a negativity bias. So when we have a losing trade, it affects us emotionally with the magnitude of 10 winning trades. So you might, if you don't know that, that's very, very true. You are very much more sensitive to loss than you are to gain. So, and that can put you in a little bit of analysis paralysis where your perceived fear of downside potential will not be overweighed by your greed. Your fear will overpower your greed. Greed is a more rational emotion. Fear is a very irrational and more powerful emotion. So shout outs to Mr. Ether Robert Warner, the one, the only, keeping it clean in the channel. in the live chat with those blazing guns of moderation. Yes, so you need to celebrate your wins because otherwise, you know, trading is difficult. It can just cripple you emotionally. All right. Oh, thanks, Justin. I'm going to sign right up to be a trader, bud. Yes, okay. Constriction of the Bollinger Bands. We are seeing a tightening of volatility right now. Sorry, I'm saying so much. Tightening of volatility. Usually what happens after we see compression of the Bollinger Bands, we see resolution. We see a breakout. And you typically want to trade in the direction of that breakout. Now, notice that we've had multiple tests and fake outs to the upside here, 2 really to speak of. And we've had 3 knocks on support down here. At this point, I would say it's anybody's game for which way this breaks. I am wagering on breaking to the downside here, and I've positioned as such. But I will be trading in the direction of a confirmed candle close above our levels of resistance or support. If we close an hourly candle above resistance, I'm going long. If we close an hourly candle below support, I'm going short, because that's how you trade breakouts. You wait for confirmation and you go. So 4-hour time frame, we're seeing the consolidation right here. This area of the market, Minks, our most popular momentum oscillator, dipped briefly negative. We had a little bit of a value area. Overall, we remain in positive territory here on the 4-hour. We saw our Laguerre reversal indicator did get overheated here. And so now we're essentially sitting sideways. Not a lot of clear data from the 4-hour, except to point out the compression of the Bollinger Bands and the importance of this type of analysis on this intermediate time frame is to give us a direction of what we should be looking to do on the lower time frames if we so decide to delve down into them. Coming down to the hourly, probably my favorite time frame to trade, short-term time frame trading. Again, what was the movement that we saw today? We saw this dip down into slightly oversold territory, trading below the lower envelope of the Bollinger Band here and then recovering. This was the area of the market that I got interested in. Again, this was the close that I took. And I'll tell you why. There was 2 things. Here's the trade that I took right here. I took it off of the hourly time frame. I used Quadriga ATR, my stop and target indicator. It's available to all the members who join the trading and investment group that we run on our Discord. What happened here was we had this hourly candle, which looks bearish, right? Like, look at this, like this candle right here that my cursor is on, that is a bearish looking candle. If you did not see what happened afterwards, you would say, oh man, price is consolidating. We just wicked above the highs. That's an inverted hammer candle or a shooting star doji. We're going down. Morning, I always get it confused. It's either morning star or evening star doji. I believe morning star is another name for a hammer candle, and this is an evening star doji because the chart pattern of is called a shooting star pattern. Like this. This is a shooting star pattern. Up, down, big wick to the upside. So yeah, so if you didn't see what was on the right side of the chart here and you saw this, you would say this is a bearish looking thing. Thank you very much, Ryan Goulding. Nestor 27 sees a Head and Shoulders. So you would say this is a pretty bearish looking candle. But what's interesting about this is that, and I didn't take any action. I'm kind of glad that I didn't, obviously, because it would have been a losing trade. But this is a type of a situation where I would try to fade this breakout, right? Where I wouldn't short this, but I would definitely, if I was feeling lucky and I was scalping with my volatility system and all the system and all the and my indicator strategy told me to go. This is the type of setup it would look like if I faded this breakout, which means try to capture a short as high up on it as possible with the belief that it's not going to actually move up. But then this candle happened. So we pull all the way back and then we close a very strong greenie above resistance. And I went long and set my take profit. You can go over here and look. Again, if Bybit will be nice. Yeah, right here. Post P&L, $203, exited at 23,369. So good intraday trade. Good intraday trade. I used a slightly tighter stop loss because I wasn't able to position for a full 2-to-1 risk to reward ratio. I used a 1-to-1 risk to reward, I did not use a tighter stop loss. I'm telling the story wrong. I did not use a tighter stop loss. I used a 1-to-1 risk to reward ratio. And since it was a 1-to-1 risk to reward ratio, I reduced my position size. I'm unwilling to lose $200. I'm unwilling to lose $200 typically on a my optimum goal, the type of trades that I'm trying to target for this year, or my day trades, are 2-to-1 risk to reward ratios where I win $400 on a winning trade and lose $200 on a losing trade. All right. If I can take 360 trades this year, all right, which is 10 assets, 3 trades a month. That's it. Trading 10 different cryptocurrencies, 3 different tickers a month. So I'm behind that because I'm only trading BTC currently at the moment, but we'll get to that later. We're working on it. But 10 assets, 3 trades a month. I'm doing this on the daily time frame too. So again, that on my daily time frame, I'm actually trading 20. So not an issue. But daily time frame, 10 assets, 3 trades on each asset per month. So that's trade each week and a rest week. Trade each week, then a rest week. That right there, that split of making $400 on winning trades, $200 on losing trades, the way you accomplish that is using the same position size with a 2-to-1 risk to reward ratio. If I can average a 65% win rate, which all my strategies test at, actually significantly higher, so does my discretionary trading, that's $93,000. That's about $93,000, $98,000 in P&L. You take taxes out, you take your losing trades out, you're left with about $73,000. Take taxes out, you're walking away with a little bit over $50,000. So not bad, not bad. And I think that's a really good, I think most, obviously I have a very comprehensive course on how to trade cryptocurrency. You guys are free to take it. It's on our website, Pathways to Profit, lots of ways to get involved with it. But one of the, I've taken so many courses and talked to people who've taken courses and all this stuff. And what a lot of these traders or educators fail to put into perspective is the actual money side of it. They just talk about the technical aspect of it, how to take a trade. They don't talk about the actual numbers, right? Like, how often do you have to trade to make a living as a trader? What risk do you have to take to make a living as a trader? How much money do you need in your account to make a living as a trader? So I'm hoping to be able to demystify some of those things through the stream, through building my community with you guys and answering your guys' questions. So any questions you guys have on actual trading, always feel free to drop it in the live chat. Okay, yeah, so we have this nice hourly close above resistance. And then this nice 1, 2, 3, and then a little blow off top here. Pull back to the medium Bollinger Band line. So again, I'd be watching for something very similar here. This looks pretty bearish. We had this kind of expansion and now contraction. And again, going back to the 4-hour, we can see that that's happening in an overall environment of contraction. And again, we got a little overbought here. Not really overbought, but we're starting to enter the danger zone here on the hourly. Even though we've pulled back out of it a little bit. So again, my overall analysis for this is targeting a breakdown out of this maneuver, out of this range maneuver. Sometimes I just say words. Crypto Rick says, do you think you could make a good enough return using only the bottom feeder strategy? The answer is listen. So there are few things that I have built in my life that I have more faith and conviction in than bottom feeder. So bottom feeder has been trading live for over 2 years, and it's up. Oh, let's go look. Let's see. Just double check here something, guys. Yep. Okay, that's good. So as of yesterday, or 2 days ago, 2 days ago, bottom feeder closed out its most recent position. Bottom feeder is up 159.27%. So that's not, I have ROI there. That's ROE. That's return on equity. That's how much your money increased. That's how much your account balance increased. Okay. I bought this. This is available again. This is this strategy, this strategy and the application to bot it is available to members of the Premium Trading Group. It's probably one of our highest value pieces that they get right now. And it just works. It's really good. I'm not gonna lie, it lost money in 2022. But it ended 2022 positively. There was like 4 or 5 down months, but over the course of the year, it made up for it. And it did the exact same thing in 2020 and late 2019. So this doesn't just work in bull markets. It works okay. It works well in bear markets. And it's the best strategy I've ever built with the help of senior analyst Alexander. And I cannot, again, like obviously I'm supposed to promote my own stuff, but it's just really good. And it's made my life better because it is a set it and forget it strategy. And there's lots of ways I'm sure it can be improved. So it's kind of this continual exciting journey that I get to be on as a trader. Now, to your question, do you think you can make a good enough return just using bottom feeder? So could you make a living as a professional trader just using bottom feeder? So it would feel very scammy of me to say yes to that. Like, oh, sure, dude, you just buy my thing and it'll just make you all the money you need. Even though the data would suggest that, again, we only have 2.5 years of data. What I will say is exactly what I'm doing with it. I have a sizable allocation of that strategy and it has not disappointed me. And I use that as a piece of my portfolio, of my trading portfolio, where I also implement my daily time frame PTP strategy, my intraday scalping strategy, and then I have a weekly contrary strategy. And then I also do investing on the side. So all of that comes together to create an umbrella of strategies, a strategy of strategies, as our good friend Johnny used to say. And I think that's the best way. I think that's the best way to do things. The way I teach people to make trading strategies and pathways to profit gets them started with a mechanical, profitable strategy and sets them up for a lifetime of success. Because if they don't do that, if they don't sit down and do the work to build a strategy, they're never going to understand that that's what you need to do to be long-term successful. Every trader I've ever met, with the exception of like 2, who is long-term profitable, they have a strategy. They follow their strategy. Not everybody uses indicators. Not everybody uses this or that or the third. But it's something you can definitely do, and the easiest way to do it for a beginner or for an intermediate is to do it with indicators. You can build a consistently profitable strategy. You can learn to look at trading like a business, look at trading like statistics. You can play the numbers game, and that's how this game is won over the long run. Thank you, Chemo. Yes. There's a lot of data on there. Yeah. It's just, and again, I want to thank, Johnny is responsible for most of that. So you guys know him as Ferry Buffin. He's the man. He's the math man. All right. We are getting close to the end of our time together. Got about 8 more minutes. So let's end strong. Any final questions you guys have, make sure to throw them in the live chat. So let's recap what we've talked about today. So we've had an intraday opportunity to the upside. The intraday opportunity on the preceding day was to the downside. So again, you'll notice a pattern here because the opportunity on the preceding day was to the upside, right? So what are we seeing here? We're seeing a ranging price pattern where the large opportunity of the range oscillates between going long and going short. Now, excuse me, that is likely to continue. So we just had our most recent profitable opportunity be to the upside. So what is likely to be the profitable opportunity right now? It's probably to the downside. It's probably for a push down to retest support or even potentially break through it. So, logical approach, if you're doing nothing else, and again, I'll now just summarize what I'm doing. I have been long on the weekly since 17,000. I have scaled out of my position. I have 20% of it left. I am starting to build a long-term reversal position here. I've built up 20% of that so far. On the daily time frame, I am shorting for a market pullback that I entered quite serendipitously on the fake out that we experienced 2 days ago. And intraday, I've been trading the range, and I am currently trading the range again. Now, full disclosure, I am not intraday short. I'm going to have a lot of stuff going on this weekend and this evening. I don't like having intraday positions open when I'm not in front of the computer to actively manage them. So take that with a grain of salt. It's a trade that I'm not actually taking. But if I were going to sit in front of my computer for the next 8 hours, I would be looking for an opportunity to take price down to the bottom of the range. However, and again, this is very important, we are experiencing contraction of volatility, which means we're likely looking for a big move. So while we could continue to drift and list lazily to the right and just range over the weekend, I think we have the potential to have a big move. Now, whether that move is decisive or not, or pulls back, history would say that it will likely pull back. But let's say we break out violently to the upside, it'll probably go for a day and then pull back. And then we'll kind of start off on Monday right where we are right now. That's what history would suggest. But we're in a daily market. We're in a daily uptrend. Things can get crazy. Yes to Crypto says, so what level or course or subscription? Yeah, I'm sorry. I know we got a lot. We offer a lot, man. If you want to get started with Pathways to Profit, Pathways to Profit is basically my life's work as a trader. It is a comprehensive guide on how to build objective technical strategies to trade cryptocurrency markets. And it covers literally everything. It will teach you everything you need to know about cryptocurrency markets. In my opinion, it will teach you what you need to know about indicator strategies, about back testing, statistics. It will then show you step by step the different indicators I use, the different types of indicators I use to construct strategies. And I will teach you how to go out and how to find those indicators on your own. You don't just have to use the ones I hand you. I'm like, hey, this is what you should test for. Here are the metrics it needs to test for. Here's the process of putting all these things together. Here's the literal process. Here is the percentage win it rate it needs to be to continue moving forward. Yeah, I put a lot of work into it, and I'm actually currently redoing it all right now with graphics and design. So, but the best way to get advantage of that right now, is to go to our website and purchase our Premium Plus monthly subscription or annual. That will give you access to the entire our trading academy on our website. You'll get access to my signals, Reflex's signals, our daily market analysis and updates, weekly mentoring sessions where I meet one-on-one, not one-on-one, but with me personally. Like, you get to talk to me with all the guys in the group for our weekly community mentoring sessions. You get access to all of our premium indicators, and I feel like there's more. Yeah, and then all our back archives of our previous mentoring sessions. So quite a lot. And yeah, I know that if you go to the website, it's not necessarily like clean or well designed. It's well designed, but it's not necessarily intuitive. We're doing a big website redesign, but that's the easiest way right now to do the thing. I agree with you, Kimozabi. You know, people get weird with money, right? So trading is kind of like that thing. And I appreciate you, Kimozabi. You're the best, man. I've seen you around for a while. You've been on here. I've talked to you a bunch, and I really appreciate the support, man. You guys are amazing. All right, guys. With that being said, thank you for everything. Thank you for watching the stream. Let's switch out to the kind of big view. Whoa, sorry. I was blasting music in your room. I didn't mean to do that. My hotkeys on my Stream Deck are acting up the last couple days, so I don't like it. Thank you guys for joining me for another episode of the Breaking Bitcoin Market Update. As always, your patronage is very much appreciated. If you guys have any questions, comments, concerns, sarcastic remarks, hot crypto tips, or death threats, please feel free to leave them in the comment section down below. I'll get back to you as soon as I can. Respond to the comment as soon as possible. Let's see here. We will be back on Monday. Same crypto time, same crypto network. We're moving into the weekend, everybody. So make sure to trade safe. Could be a lot of volatility. Use your risk management practices that we've been talking about. Set it, plan the trade the plan. Don't be running around like a chicken with your head cut off, because you're not a better trader than the market makers and the people moving the market. So find your edge, identify your niche, take only the trades that your system tells you to take, and you'll do okay. It's slow progress, constant iterative improvement over time, not get rich quick. It doesn't work that way. All right. Doesn't work that way. That's the only that way leads to liquidation. All right. If you guys would like to work with me or our community throughout 2023 to build your own trading strategy, or to work with us to grow and build and protect your own wealth, lots of ways to get involved with our community. Down in the links in the description, there are many links to get involved with us. And feedback is always greatly appreciated. You can support us for free by smashing the like button. Boom. Smashing the like button and subscribe button. It's right down there. And again, we'll see you on Friday. We'll see you on Monday, guys. Trade safely over the weekend. Cheers.